Apple Computer announced their first quarter for 2024 on February 1st. The results were better than expectations, with services and iPhone sales leading the charge. However, shares sold off on the open but recovered up on the day. Revenue for the first quarter of 2024 came out at $119.6 billion. That's a 33.6% quarter-over-quarter improvement, but just 2% year-over-year. We'll see below how Apple's revenue is cyclical, with the Christmas season being the peak. Gross margins were 46%, slightly better quarter-over-quarter and year-over-year. Operating profit was $40 billion, about 34% of revenue, again with better quarter-over-quarter performance of 50%, but just 12% year-over-year. Net income delivered $34 billion, or about 28% of revenue, growing 48% Q-over-Q and 13% Y-over-Y. Good results. As previously mentioned, looking at the quarterly income data, we can see that there's definitely a cyclical nature to revenue at Apple, with peak sales coming in the Christmas season. In fact, revenue was down from their peak in 2022 at $124 billion, with the compound quarterly growth rate of negative 0.4, basically flat. In fact, all the key line items have all been flat on a compound quarterly growth basis. Have we reached peak Apple? Revenue by geography shows the Americas bringing in about 42% of revenue, or about $50 billion, up only 2%. Next was Europe. Their results were better by 10% to $30 billion, or about 25% of total revenue. Greater China is about 17% of revenue, saw weaker demand by 13% to $21 billion. APAC reported $10 billion in revenue, or about 8%, stronger by 7%. Japan, Apple's smallest geography, grew the most by 15%, with an impressive showing of $7.8 billion. Turning to segment revenue, we can see that iPhone sales dominate at 58% of total to $69.7 billion, growing on a year-over-year basis, or a Christmas-over-Christmas basis, by 6%. Apple's services industry was the best unit, growing 11.3% to $23 billion. Their wearables, home, and accessories business line actually declined by 11%, bringing in just $12 billion. iPad sales continued to contract at 25% year-over-year to earn $7 billion, while Mac sales saw basically no change in revenue, reporting $7.8 billion. Can iPhone and services growth keep propelling Apple higher? If we look at our ratios, shares outstanding decreased by 379 million, or 2.4%, from share buybacks. Earnings per share came in at $2.18. That's up 16% year-over-year and 49% quarter-over-quarter. Sales per share producing $7.70 per share, improved by 30% quarter-over-quarter and 5% year-over-year. Cash per share stands at $2.62. That's 100% year-over-year. Book value improved to $4.76, up 34% year-over-year. The current PE of Apple is around 28.23, and the S&P 500 is 27.52. That makes sense given how much weight Apple has in that index. PE growth is good at 1.79. Apple does like to use debt, though levels aren't excessive, as the debt ratio is 0.27. Debt to equity stands at 1.28, with $1.28 of debt for every $1 of equity. Short-term liquidity ratios are good. The current ratio at 1.07, quick ratio 0.72, and the cash ratio at 0.3. All decent numbers, indicating no short-term liquidity issues. The equity multiplier at 4.77 shows how much Apple uses debt to run the business. Return on assets solid at 38%, up 11% year-over-year, and return on equity is 183%. Cash flows were also good. Operating cash flow $40 billion, up 17% year-over-year. Investing cash flows improved $2 billion, primarily from maturing securities. Financing outflows at $30.6 billion. $20 billion was used in share buybacks alone. Free cash flow to the firm is $42 billion. Lots of cash. I wonder what they will do with it. Dividend paid was 25 cents this quarter, yielding just 0.54%. Enterprise value at the time of writing is $2.9 trillion, which gives us a revenue multiple of 9.7 times, an EBITDA multiple of 52.5, and 68 times free cash flow. Key takeaways from the report are the strong financials in general. Lots of cash, return on assets, and equity are good, and the service segment is growing and more than offsets the declining sales within iPad and Mac. On the con side, our only concern is growth in iPhone and services. Are they really enough to keep Apple growing? They'll need to have some new impressive products going forward. We give Apple a neutral rating. We have no exposure to this company. Like and subscribe.